Hey team, welcome to the Lever Report, a weekly video newsletter for human-centric leaders to navigate the week ahead. I'm Drew Fortin, here with your latest update for the week starting Monday, June 30th, 2025. Last week, the markets rebounded. Salesforce shares how it's training its entire workforce on AI. New Gartner data shows how HR leaders are addressing the skills gap, and a new report highlights a management meltdown crisis. Here's the news to start your week. It was a fascinating week in the markets last week, truly showcasing the resilience of US stocks even amidst everything happening geopolitically. The Nasdaq hit a new high and the S&P 500 closed at an all-time high for the first time since February. This came despite President Trump's announcement of terminating trade talks with Canada. It's a clear market indication that market optimism is largely fueled by the US-China trade truce in anticipation of a Federal Reserve rate cut. The Wall Street Journal reported that investors are venturing beyond the tech sector and exploring new opportunities, betting on less popular industries for boosts from rate cuts and tariff adjustments. This is a positive sign that the market is starting to broaden. And on the inflation front, the Personal Consumption Expenditures Price Index, which is the Fed's key inflation gauge, rose slightly more than expected, hitting 2.3% annually. Spending fell 0.1% for the month, while personal income declined 0.4%. So perhaps broadening investor markets indicates we're turning the corner on a market that's looking beyond tech dominance. Investors are starting to get more comfortable searching elsewhere. And tech companies, let's face it, just aren't hiring right now. They're trying to trim for AI. So it's possible that renewed investor focus outside of the Mag 7 could rejuvenate sleepy sectors, and talent demand could follow. Also, the interplay of trade policy and potential rate cuts, that significantly influences business confidence and investment. The question we should all be asking ourselves is how can we best position our companies to mitigate risk and seize the opportunities? And when it comes to strategic adaptability, this dynamic economic landscape calls for adaptable HR and talent strategies. We need to be thinking about what specific actions can leaders take to ensure their workforce is agile and resilient in the face of evolving market conditions. So why should any leader in HR or management pay attention to this week after week? Well, weakening consumer spending is the ultimate bellwether. This will obviously impact company revenue. And what does declining personal income mean for employee morale, compensation, expectations, and retention strategies? If business is slowing, employees get restless and start looking elsewhere. So it's important we remain diligent in keeping our employees engaged and feeling purpose and ownership over where our business is going. The company Salesforce is making significant strides in integrating AI into its operations, specifically by training its 72,000 employees to leverage AI agents. CEO Mark Benioff told Bloomberg that AI now handles up to 50% of work in functions like engineering and coding, and Salesforce expects to produce 1 billion AI agents by year end. While Benioff reinforced his belief that AI allows humans to focus on higher value work, Salesforce laid off approximately 1,000 employees in February, despite hiring for new AI products. To achieve its AI goal, Salesforce created a workforce innovation team to identify the top 10 skills employees need for success with AI agents, categorizing them into human, agent, and business skills. Lori Castillo Martinez, Salesforce's EVP of Talent Growth and Development, highlighted it in an HR Brew article that reskilling is more critical than ever at Salesforce, as digital labor powered by AI agents is reshaping how the businesses operate and jobs are formed. The company's goal for 2025 is for 80% of its workforce to achieve fundamental AI skills through continuous learning and experimentation. Now, Benioff is famous for his famous Ohana philosophy. That is coming under fire lately. Ohana means family in Hawaiian. It's really hard to maintain a family culture when you need to restructure so much under this pressure to evolve with technologies like AI. Now, the approach that Benioff has is sound, prioritizing AI's impact on roles and creating a dedicated team within HR or talent development to assess how AI will transform existing roles and what new roles might emerge is smart. Holistic upskilling is needed. We need to develop comprehensive upskilling programs that address not only AI literacy, otherwise known as agent skills, right? How do you create an agent and use an agent, but also think about critical human skills, adaptability, emotional intelligence. and business skills like problem solving and data interpretation. So, really, what this is about is businesses, in order to capture and seize the moment, especially here with AI and technological evolution, they need to create a culture of continuous learning. They need to foster organizational cultures that encourage ongoing learning and experimentation with new technologies, giving employees the tools and resources they need to succeed. And when it comes to strategic investment in talent, businesses need to recognize that AI adoption is an iterative process requiring continuous investment in talent and a flexible strategy to bring employees along in the journey. With over 70,000 employees, I think it's really smart that they have at Salesforce an EVP of talent and growth development in charge of this effort. It makes a lot of sense. It also just plays in general when we think about HR's pivotal role. We need to emphasize HR professionals must be at the forefront of the transformation, not just part of it. We need to integrate AI into our talent strategies to benefit both employees and the company as a whole. A new labor market insights report from Gartner reveals that organizations are facing the most competitive talent market in over a year, with nearly 70% of HR leaders expecting increased competition in the next 3 months. This comes as 70% of HR leaders state that their current market shifts are jeopardizing their talent strategies. Quite simply, HR leaders just don't feel confident in their organization's ability to adapt. The report also highlights a critical issue, a skills gap, with 53% of HR leaders identifying it as a problem this month. Now, this comes at a time when a majority of organizations are transitioning to skills based talent management, but less than half are confident that these investments are actually going to pay off. And a significant barrier here is addressing the gaps. How do you actually assess skill proficiency and verify the skills of current employees? So, for leaders looking to navigate this challenging landscape and truly close the skills gaps, the core issue of skills validation needs to be addressed head on. Relying on subjective assessments won't drive meaningful progress or employee buy in. Instead, HR and talent leaders must standardize performance management and career development frameworks as a whole. This standardization needs to ensure that any identified skill gaps are transparently communicated, objectively measured, and most importantly, mutually agreed upon by both the employee and their manager. When the employees understand and accept these identified gaps as legitimate, it paves a way for a legitimate and impactful development plan, fostering a culture of continuous growth and equipping your workforce with the skills needed to propel your business forward. A new report called The Great Management Meltdown by the Center for Workforce Transformation at Perceptics reveals a costly management crisis impacting the U.S. economy by over $500 billion annually. The study, authored by Emily Killman, Senior Director at the center, highlights that employees under poorly rated managers are 4 times more likely to leave, contributing nearly $324 billion in turnover costs alone. Managers are facing unprecedented pressure from both leadership demands and employee expectations, with nearly 60% expressing a desire to leave people management roles entirely. This pressure is leading to harsher management styles, as 40% were tougher managers, and 3/4 of those managed with an iron fist are actively seeking new jobs. The research identifies 5 key behaviors distinguishing exceptional managers: inspiring others, developing others, communicating a clear vision, valuing people, and driving innovation. And lastly, emphasizing that personalized development rather than generic training is crucial for building stronger leaders. For leaders aiming to boost performance and elevate their HR talent strategies, this data is a clear call to action. We need to move beyond generic training and implement personalized development approaches for our managers, leveraging data from 360 feedback and employee listening to pinpoint specific behavioral gaps. Focusing on the 5 behaviors mentioned, like fostering innovation rather than resorting to authoritarian tactics, will dramatically improve employee retention and productivity. Now, remember, employees under excellent managers are far less likely to feel ruled by that iron fist, even when demands are high, because expectations are delivered with care and commitment to success. By investing in a holistic development of our managers, providing them with strong leadership from the top, clear expectations, and tailored support, we can ease their squeeze and build a more resilient and engaged workforce, turning a potential meltdown into a powerful lever for growth. And that's your lever report. Check the show notes for any articles or research we covered today. And if you're enjoying this content, please show your support by liking this video and subscribing to our channel. Also, please ask questions or share your thoughts in the comments section below. We look forward to engaging with you. I hope you have a productive week, and we'll see you on the other side.